Fortis Healthcare. So let's discuss this two-way battle in greater detail. Sanjiv Bhasin now joins in to give us his expert view on the same. So the Manipal Group has given their revised offer for the deal, sweetening it at 155 rupees per share, and IHH also preparing to formally approach Fortis Healthcare. With these two players in the fray, how are you looking at this battle emerging for Fortis Healthcare? How are you reading into the most recent developments?
Well, the first offer was not in favor of the shareholders, and that's why that left a lot to be desired. And you must understand that the stock is owned by very, very marquee investors. The promoters hardly have any stake. So I think there will be a sweetening which has happened. Now, you also have a right of 4,000 crore, which means that promoters will also be putting in more money. But I still think that the fair value would be closer to 175. The stock is a very, very, it's a lucrative business. It has seen a lot of pain because of the, promoters' misdoings and the excess debt. But I think a value creative asset will be bid aggressively for. I don't rule out 175 targets in the short run. The offer is going to be, maybe renegotiated. But I think this 155 would be a much better place for the stock immediately. But if you are a shareholder, I would say stay put. This is a very good business to be in. And in the short run, the rhetoric can be both-sided. But over a period of time, this is going to be value accretive.
Well, 175 is where you're valuing Fortis, whereas, the Manipal Group has just valuing the deal at 155. But with IHH as well entering this battle, that's at least what sources are suggesting. Do you believe that this valuation may as well be met? Because there's naturally going to be that entire, sort of valuation war that may take place between IHH and Manipal to acquire Fortis.
Yeah, but 155 is still a 20% upside from what the original offer was. Now, like I said, it depends on the people who need to sell. We know that Yes Bank has a 17% stake. They've got they had to buy that because of the, collateral which they had from the earlier founders. So someone will blink, but I think 155 to 175 would be very, very key where this asset could be sold off.
Since the fact that, since you seem to be very bullish on the business, what sort of an acceptance, or rather what sort of a, when the open offer does come by, do you believe that investors would want to take part in that?
So like I said, in the short run, the pain was overdone. The weak hands had already exited. Now they are stronger hands there. And like I said, some of the collateral and the leverage part could see, exit. But I don't see the stronger hand selling that in a hurry. Like I said, you'll have to weigh this always that this is, the market cap of an Apollo is close to 14,500 crore. So you would get something like 10,000 crore at least on the market cap of this, which will make it more viable for, someone to exit that stock.
Sanjiv, do you believe that, for a company like Fortis, in terms of the kind of valuations it's commanding and the kind of controversy that we've seen that the company has faced with, that this kind of two offers with Manipal sweetening the bid and IHH now in the fray is potentially the best that it can get?
Avan, I'll give you another view, just a minute, Look at the three assets which have come for sale. The Binani Cements deal, the Bhushan Steel deal, and now this Fortis. All are being very aggressively bought by all three, the larger players, which is telling you that, in the short run, there may be more pain, but in the longer run, these seem to be very, very good businesses to be in. So I don't rule out over a period of time, again, this stock going back to that 175 to 190 or 200 levels after this whole rhetoric is over.
Okay. Fair enough. But, a lot of people are also worried about the sort of operational problems that do exist in Fortis. Do you believe that the new buyer would be able to smoothen out and iron out all these wrinkles that do exist currently in Fortis with ease, especially since we are talking about an outside acquisition coming in?
See, Fortis runs lifestyle. The cost of running is extremely expensive, whereas Manipal is a tightly run group, and I think the mix will be very, very the mix will be very good going forward. So once the costs are brought down, the debt or overhang leverage is reduced, we know that this is the best business to be in. In fact, you are aware the type of medical and the expenses and the insurance businesses, how they've flourished over the years. So I see no let up. All I'm saying is that this synergy of there being very tight-fisted and the Apollo, the previous promoters being very large-hearted has to materialize in more margins accruing over a period of time.
Okay, you've really, spun a new light on it and given us a heads up as to what exactly, these two players being in the frame means for a Fortis Healthcare. Could go back to the days of glory. And yes, you have seen a lot of other battered assets, seeing a lot of aggressive bids coming in, Fortis Healthcare being another case in point. By the way, as we were going through this conversation, you've seen the stock price of Fortis Healthcare pick up some might, and now as we speak, it's holding out smartly in the green. Sanjiv, appreciate as always your time. Thanks for joining in.